Chris and Mark. They've both heard of Bitcoin and Ethereum. But while Chris is using
Okay, testing, testing, testing. 1, 2, 3. Friday, Saturday, Monday, Tuesday. 20 dwarves, 20 dwarves. In sooth, I know not why I am so sad. Welcome, everybody. It is approximately 8 o'clock in the morning on a Friday, Friday the 18th, the last trading day of the foreign exchange market. Well, that's not quite true, right? Because you can trade all day, every day. But really, this is, I think most of the pros have gone home. The only thing that they're holding on to is maybe the stimulus, but that's not going to get passed till next week. Remember, I told you days ago that it probably won't happen next week. So it'll probably happen next week. So people might be disappointed, but then again, they've already made the trades, and they probably won't even be watching the charts. Ha 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 ha! Wee wee! That means we must be hitting profit targets. If all the money's been put into the market, we must be hitting profit targets. So then we'll discuss what to do next, and maybe how to plan for next week, how to plan for next year. Really, I'll answer anything that you want. This is why we're here. Remember, the raison d'etre is really, truly for me to use technical and fundamental analysis to help you plan the future. So let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, good morning, everybody. My name is Wayne McDonald. I'm a currency trader. Yeah, that's it. That's me. I did a few other things before coming here. But nonetheless, Forex has caught my, the first time I even just read about it, I went, what? Dumbass, what? Right? And that was it. I was hooked. Somebody said $2 trillion a day. I'm in. What do I have to do? Do I keep my clothes on? They're like, yeah. So things have gotten better over the years since I first started trading. First of all, there is knowledge. First of all, there is other currency traders. First of all, you can buy books. You can take courses. First of all, it's not a mysterious thing. That's a lot of firsts. But when I started, it was a total secret. It was something that just the banks did. Isn't that neat? And I'm like, I want to be that old white guy at the top of the bank smoking cigars and laughing at everybody. That's what I want. Isn't that funny? Right? Has it changed? I think there's a lot more equal opportunity, because I think to get it to be a banker back then and to be the old white banker at the top of the bank smoking the cigars and laughing at the rest of the world, what was his family like before he had that job? What kind of education did this person have, right? All of a sudden it mattered what club you're in, whose dad you were, what year you graduated from Harvard or Princeton. You didn't go to Harvard or Princeton? Screw you. You can't come into the bank. And don't touch the cigars, right? Cigars are not for staff. And now what? Now it doesn't matter if you're in a little town in South Africa. You're still going to be trading gold against a billionaire in Indonesia, or a hedge fund manager in London, right? Or a wealth manager, or even the CFO of Google in the Silicon Valley. Isn't that neat? Doesn't matter who you are, what you speak, what you believe in, who you want to make love to. All this stuff doesn't matter anymore. It's just, are you a little bit better than 95% of everybody? Can you be just a little bit better than 95%? I think you can. And that's why I'm here. So I want to help you be a success. Has anyone here had an amazing 2020? despite all the challenges and exogenous shocks? Did anybody have a good learning year? How about that? Even if it's not profitable, did you learn anything this year because of these webinars and hanging with me? Has anyone had a good learning year, a good profitable year? Do you feel good about your capabilities in 2021? Ron says me. Alex says I learned so much. Aaron Spencer says yes. Sarav, me. Dr. Rage, yes. On, yes, I learned tons. Alejandro is excited for 2021. Elmer, yep. Ray BS, Beast. R6 Beast. I'm missing it, aren't I? R6? R6 Beast? Anyways, yeah, lots of people. We're in a very good year. Awesome. Double yeses. Very cool. So make sure that you've taken the opportunity to visit tradersway.com just as a way to thank them. Open up a demo account just to document that this was a good year and you'd like 2021 to be just as good of a year. Okay? These webinars don't cost you money, but they are not free. They come with an obligation. All right, cool. So please ask questions, get involved, and stay involved. I hope you're with me every single day of 2021 as well. Okay? Whether it's the Forex.Today YouTube channel or the FX Bootcamp YouTube channel or FX Bootcamp live groups. I hope that, we can be together for 2021, and it's also a pretty kick-butt year. Okay? I remember things like talking about the business cycle early in 2020, and we were dealing with things like seasonality, and then COVID hit. So my response to COVID was to coach every single day, not just to the public group, but to the private group. Okay? So I increased my interaction with that group by 500%. I also lowered prices by 80%. So I lowered prices by 80% and I increased the service by 500%. And I hope it was helpful, and therefore I had an opportunity to work with a lot of you one on some. And I think it was pretty good. Then we got through what we thought might be the worst of COVID, and I got free money from the government. Whoop, whoop, thank you, stimulus, right? So I did what every good foreigner would do in the land of America. I took my family to the beach and spent all the government money. But think of all the waitresses and the hotel owners and all that kind of stuff that got their piece of the pie, and that's how a stimulus is supposed to work. I didn't get the stimulus. Okay? The waitresses, the cocktail waitresses, the food waitresses, the cleaning ladies, right? The Airbnb people, they got my stimulus, and it spread it out. Then we had to get through summer together. That was pretty interesting, wasn't it? But I thought we did all right. We also knew that the liftoff of 2020 was going to happen late. So we talked about it, we prepared for it. And we did take good trades earlier, but we knew to expect mediocrity. Do you remember? Think big, expect small. Do you remember that? We went through that weeks and weeks and weeks. You got to do what you got to do because you don't know the outcome of the future, but you shouldn't expect the typical moves that we would get in a non-political year. So you learned a lot about the political cycle. You learned a lot about the business cycle. You learned how to trade exogenous shocks and why there's a behavioral return, not an economic return to the market. You learned why I thought the US dollar would be weak for years and years and years, not minutes or days. Right? We went through all that monetary policy and central banking policy, behavioral finance, trader psychology, can't save your way into prosperity. Do you remember that? That was like the bottom of the stock market crash, is when I started hitting you up with that. Then we had to wait and be patient. I said, stay strong psychologically. Be ready, willing, and able to do your job. Focus on your bias. Focus on the seasonality. What do we know? What do we know? What do we know? Do you remember those questions over and over and over again? Let's go back in history. What do we know? It's not what we think, it's what we know. It's what we can prove that matters. Then I prepared you for the election. Holy smokes. There was a front run to the election. There was election night. I did a 15-hour day, 15 hours worth of webinars that day. Just to make sure you were not alone during the election. The very next day, well, one of the points of the retracement in the election night was, what was our job? What are we supposed to be ready, willing, able to do? Grab trades that will last until the Fed meeting at the end of the year. Okay? Right now, since that move, which we did together, I only took 6 trades, and I'm still sitting on 2,500 pips. Well, not. I've locked in 1,400, and I'm still up 1,000. Going into where we made it through all the central banking news. Remember, we still got tomorrow's People's Bank of China information, but we've gotten through all the other central banking news by and large. And now we're just sitting here waiting for the stimulus package that will not happen today. I don't think it's going to happen today. I think they still need to debate over the weekend, and they want to do this Christmas Eve now just because it looks really good. Okay, so they're going to have to do another stopgap funding today, push everything over the weekend. So now we're sitting around waiting for free money from the U.S. government, and we're sitting around waiting for Brexit. Other than that, the year is done. But I'll be here all next week, so this isn't a goodbye. This is just, where are we now? Where are we? And I think there's a lot that we can be thankful for and grateful for. I think there's lots of opportunities to learn and reflect. And while you're doing that, you should write down the things that you did learn, that you own it now, that it's in your brain, it's in your soul and your spirit and your essence. It's yours now. I gave it to you. Now, maybe it took hours and hours and days and weeks and weeks, maybe years and years for you to catch it. But now that information and knowledge is yours. So I want to make sure that you between now and especially next year when we get going, full bore, full volume and volatility again, that you have made it a good year because you retained the knowledge that you were given. So yes, I will be with you all next week. And I'm a currency trader. What am I going to do? Not look at the charts? No. So I'm here. And the other reason, Marina, is I'm grateful for everybody here. I'm grateful for you being in my life. You keep me focused. You keep me sharp. You keep me interested and intrigued. When I go through my life, I say, "Ooh, that's interesting. How can I take that bit of knowledge that I found somewhere out in the world, how can I translate that into what I can share with you? How can I translate that into an educational experience, or at least a knowledge transfer?" And sometimes these things are very complicated, let's say economics, right? And I'm like, well, how can I share it so that everyone would just simply get it? Because I think the farther the more you get educated, the less that it makes sense, right? And I'm not even sure if the professors really get what they're teaching me at Harvard. They're just teaching what they've been teaching for the last 300 years. So I'm like, so how do I translate that into what I know? What do I know? What do I know? And then what do I know you know? And how can I translate all this complexity into common knowledge or common understanding? And that process is fascinating, right? How can I take a master's degree level education and translate it to, where people go, yeah, I totally get that. That totally makes sense. So I enjoy that challenge, and it keeps me sharp because it makes me have to think. Do you remember the definition of intellectualism? To be able to think critically based on your knowledge and be able to create a solution. Like, it's so interesting, right? Now think about why that's good for me. What's in it for me? Well, what's in it for me is I have to be able to sit down with a potential investor that might have a lot of education. Therefore, I have to talk big because they expect me to. But then there might be investors that have minimal or no education there. So I have to talk in common terms, that in ways that things make sense without talking over it, like not preaching, but sharing. Right? And so you have to have that skill to say, okay, this is really complicated. We're talking about global macroeconomics now and central banking policies and all of this. But let's just talk why it makes sense. So, and then people can make informed investment decisions. So it's really cool. So thank you for being here. Like I said, you keep me inquisitive. And I think when you lose that, you lose your edge. So thank you. I like the way you trade. So thank you for being in my life, and thank you for being a subscriber here. Thank you for being a client to Trader's Way. Thank you for being a member of FX Bootcamp. We'll get on with it. Okay, Theta, I know you sent me an email, send it again, but it's one of these things like, the only thing you possibly could have done is bought the stuff, ignored the big button that says click here to create your account, then you backed up, and then you did it again, right? And so therefore it charged you a second time, and then you still didn't create your account. So I don't know what it is. I didn't have time yesterday, so send me another email, and I'll see what I can do. Okay, Theta, I'll try to get you resolved. Okay? Okay? Yeah, I will do my best. Thank you, Jean-Guy. I'll do my best. It's one of these things like everything we create should be self-service. Like there shouldn't be a need to ask me for help because I'm not full-time customer service. So it should work. So it worked for like, I don't know, thousands of people. I don't know why it's not working for you. But we'll look into it, okay? All right. So here we are. Hang on, I gotta move my guitar. I hear echo as I speak. Yeah, all right, it's in tune. I know because I have perfect pitch. All right, what do we know? Euro super strong, dollar super weak. Hey, I'm long euro dollar. Nice. What else should we be on? Euro yen, obviously. That pig keeps coming back. Oh, thank you, Amanda. But Amanda, like, how long have I known you? Right? Like, has it been 100 years yet? So, like, you guys are friends and family. You know, I care about you. I want you guys to succeed. Right? Crypto's the prophet of rage. Okay, so sort of stuck in the middle here. 120 years. Yeah. CAD down. Okay, interesting. Yen down good. Dollar down good. Swissy down good. Nice. Right? So we've lost our APAC. And then, you know, I've been staying away from the pound. I just have. Quadruple witching today? Yeah. Everything is expiring. And if quadruple witching means anything, and I haven't really quite seen an impact of it, but today is in particular a good one because the highest, let's say the most active options trading day this year was the day before Thanksgiving. So they're going to expire, and there's going to be a lot of options out there, right? But I still expect wah, wah, wah. I'd consider that meh. All right, so anyways, disappointment on the Aussie, definitely disappointment on the Kiwi, but guess what? I took profit on those trades. Aussie versus US dollar hit a 2.5-year high yesterday, today, I don't know. So I made a big mistake. Okay, anyways. I was trying to delete the spammer, but I couldn't do it for some reason. So what else will I have to do? Could Brexit lead to negative interest rates? Well, those are two different things. So now you have to thread a thought process. Will the Brexit force the Bank of England into lowering negative interest rates? I don't know. All right, so let's talk about what we do know. Remember, like the what if, I don't deal with what ifs. I don't think about what ifs. You have to explain to me why you think so and give me, facts on that lead to your conclusion. But like, could Brexit lead to negative? I'm not trading it. That ain't real to me yet. Okay. Now, anything can happen. They can do whatever they want. But it's just, yeah. But you have to come up with that one, Alton. You have to show me your alpha. You have to study. You have to show me where the Bank of England says they're going to go negative. And because of Brexit, well, what would that fix? Like, think about it. What would negative interest rates do to fix that? Okay. How about this? Why did the ECB go negative on interest rates? How about let's deal with this. Why did they do that? Anybody here can answer. Yeah, well, Alton, you have to thread that together better. So why would negative interest rates happen because of a no Brexit deal? Like, what does that fix? Right? But no, so I'm pushing. You have to think it through a little bit better. It's too easy just to ask me a Hail Mary question, right? I want you to think about it. Oh, that's interesting, Kareem. I didn't notice that. I'll have to go back and see. Somebody changed something somewhere. To make the euro weaker. Okay, yes. So why would that help them? Or why is the euro strong? Right on, Mahai. I appreciate that. Yeah, probably. Okay, to create inflation, all that, promote trade. So, like, let's take a look at this. I'll go to count history. Okay, so these 2 euro dollar. Wait, no, it's got to be over here. Okay, we'll do this. Here's my 2 euro dollar trades. So I've been long euro dollar for what, a month and a half? And more than 10% of my profits have been lost to a negative swap. 10%. 10? It's more like 12%. 12% carrying cost. And of course, it's only 12% because I'm up, 1,000 pips. If I was only up 300 pips, it would still be the same carry. Can you imagine that? This could easily be 30% carrying charge. So if I was trading billions on this, it's pretty significant to say, well, okay, good trade, but you've paid out, $33 million in swap because of the negative interest rates in Europe. So you see, it makes you change what your process of whether you want to buy and hold euro dollar. Now, when you buy euro dollar, you're actually creating deflation because the value of the euro goes up. So the purchasing power parity, if you guys want to do your research on economics, purchasing power parity indicates that 1 euro buys more than it used to. So if your purchasing power per euro has gone up globally, what has it done to your domestic pricing? Well, in terms of euro, right, prices have fallen in terms of euro relative to your purchasing power parity. So it's deflationary because you're lowering prices in terms of euro. Okay, so let's say a bottle of Coke is 1 euro. Well, I guess you couldn't do it that way. Hang on. Well, we'll just leave it at that. Let's just leave it at prices relative to your euro have fallen. That's deflationary because inflation or prices going up. So those that are making big decisions now are questioning whether they should make this decision because you're guaranteed to lose money every day. No, that's real, not nominal. Inflation is inflation. Okay? Nominal is just the headline number. Real, you have to subtract out. Okay? Okay. So there you go. So I'm lucky that my euro, okay, right, so I'm being charged $45 per month. Okay, so let's do it that way. Let's go back. So a month and a half, you turn 45 into 60, right? And I've ponied up $120, let's say. It's a little less, $118. Okay, so let's do it that way. Let's go back to here. So the math now is $45 over 115. So what am I losing relative to my investment? My investment. $45 divided by 115. Okay, I'm being charged 40% a month to hold this. So can you see where it will determine whether you truly want to make these investments? That's right, but Neil, I'll make it up. Or Nils, I'll make it up to you somehow. Yes, there was a glitch in the matrix yesterday. So I think what I'll do is I'll do some mini webinars next week. I'll do some like newbie webinars or something. We'll spend time next week sharpening our saws or something. I'll come up with something. Well, okay, so Theta says, why don't they want the euro to be attractive? Well, they don't want it to be attractive. They want inflation. So let me put it this way. Let's say a BMW X5 last year was $100,000. It's probably about right. All right. And this year, the BMW X5, let's say nothing has really changed. It's the newer model, but it looks the same. There's no new features. I mean, it's pretty common with the BMW, right? There's no real major difference between a 20 and a 21. Okay? So that model now is 125. Okay. Okay. Then you go over and you look at the Infinity. Right? And they have something even nicer for 85K. Now, it's not a BMW, it's an Infinity. It came out of Asia, but the Asian currencies actually went down over this period. The European currency went up. You get nicer features, better technology. And you're like, well, it ain't an X5. I like X5s. My kids like X5s, right? But then you're like, but the back seat's a little bit bigger, and you get the seats are more comfortable, and I get some other features that are upgrades on the BMW, but I get like heads-up displays on this one, and it costs me that much less. You're like, 40 freaking grand? I'm going with Infinity. Boom! And you're gone. Okay? Okay, you're gone. You wanted to buy the X5, but you just have to go with the Xfinity. Tesla's better. What an X. Okay. The Tesla X model is like the minivan for women that don't have children. All right. So that's why Europe doesn't want a strong dollar or a strong euro, because it's pushing the price of BMWs up. Not in euro terms, in dollar terms. You'll need more dollars to buy the same dang European car. And at the same time, like the Japanese yen is actually falling. So now you can get more Infinity than you could last year for the same money, and you get less BMW. So BMWs went up at the same time Infinities went down, or price, and so you're like, wow, dude, $40,000 is a lot of money, even if you don't need a lot of money, right? Like if you already have a lot of money, still an extra 40 grand, you're like, for something that's comparable or even better. Dude, I'm telling you, it's attractive. And then you show up to buy your Infinity. This happened to me with my BMW. They're like, and this was, I don't know, what is it now, a year and a half ago or something? But I'm like, okay, I'll take it, wrap it up, let's go. And they're like, how are you going to pay for it? I'm like, well, just can I use a credit card or something? And the guy says, I'll give you 1.9%. I think it was 1.9 back then. And that was basically the Fed funds rate. And I'm like, what? Now think of it. Why would you finance then? Okay, not lease. This is to own it, but they're like, BMW Finance will give you 1.9. Right? And you have to remember the Fed funds rate was about that, right? The 10-year T-note was 1.9. So I'm like, wow, that's actually at their cost. Right? BMW was going to give me money at their cost of borrowing. So what does that do? Well, now you got an extra 40K to stuff into the stock market. As long as you do better than 2% a year, it's smart money. So, how much has the stock market gone up in 18 months, percentage-wise? Better than 4%? Okay? So, I've probably made $20,000 on the 40K. So right now, because I was smart with my money, half the BMW was free. See what I mean? It's so easy, right? The algo is so easy. So I bought a brand new BMW for $20,000 off the lot. You're like, no. I paid more than that, but they gave me $40,000 and I invested it in the stock market. So probably in 2 years, that BMW was absolutely free. This is why I say you got to treat your money well. Treat them like employees, like loyal servants. They never bitch, they never complain, they work nights, they work weekends, they work holidays, and they're always super happy to serve. So treat them well. Never spend money. Never. Never, ever, ever spend money. But what I'm going back to the why would Europe want a weaker euro? It's because they want to export. So like Germany is the second or third largest exporter in the world. So just Mercedes and BMW, okay, alone demand a weak euro. I mean, it's huge to the German economy. Is there anywhere on earth they laugh at you for driving a nice brand new Mercedes? Do you get laughed at in Australia? Like, oh, Christ, look at that Mercedes. What an idiot. Crikey. Right? Is there anywhere? You're in Timbuktu driving your big old Mercedes 4x4, right? You got your G-Wagon, and they're like G-Wagons. They're ugly. They're stupid. They have gaps in the doors that you can stick your finger through. $230K, man. Yeah, E-Class. Yeah. Well, there's a reason for that, and this is taxation. I was talking to a guy in, where the heck was I? I was thinking like Sweden or something. Probably Sweden? Finland. I think it was Finland. And so I'm in this giant Mercedes leaving the airport, going to the hotel. And so I'm an economist, right? So I always strike up conversations, even though this, my God, was 20 years ago. Anyway, so I'm talking to the guy driving. He's like, yeah, in Finland, he's like, taxes are nuts. He's like, it's like nearly 100% taxes if I buy this Mercedes. Okay? But he says, here's what happens. If you're a taxi driver, at the end of a certain amount of depreciation, you can sell the car and keep all the money tax-free. So what you do is you go out and you buy the most expensive Mercedes you possibly can. Like, I think it was an S-Class Mercedes. Like, it was nice, right? It was practically a Maybach, and it was just like a cheap taxi drive, right? Well, taxi, limo, but cheap drive from the airport to the hotel. And he's like, yeah. He says, like, in Finland, this is $300,000, but in 3 years I'm going to sell it and it'll pay for my house. You're like, nice. So you got to understand the game you play. So anyways. Mahai says, so a good investment would be to buy Japanese auto stocks. I didn't say that. You might want to look at South Korea first. Okay. Yeah. Well, Thiago, back in 2007 through 2008, during the financial crisis, I did a lecture on how to get a free Ford F-150, I think it was. And it had to do with their money, like their offers. And I think if you bought 2 of them, somehow, I forget how it had, but it's the same thing. You got to have cash. Like if you're poor, right? So you have to be able to say, well, you have $40K in cash, or you can buy a car. Most people say, well, I don't have $40K, but I'm going to buy a car. Okay, you're going to be poor forever. You can't, you're in a poverty trap. You're like, well, Wayne, I need a car to drive to work. No, you shouldn't have a job. You should have a business. You should be self-employed. But whatever. Okay? So people don't have money, but they have to have a car to go to the crappy job that apparently doesn't pay them any money. Okay, so people get in the poverty trap. And luckily you're a currency trader, so you can get out of the poverty trap. Okay, because you don't exchange your time for money. Okay? So, to go back over this again, if you had saved 40K, right, and then you can borrow 40K at 2% a year. Meanwhile, your stock market is going up 8 to 16% a year. Why would you spend your 40K? It doesn't make any sense, does it? So you're like, okay, I'll take their 40K. I'll pay them 2%. Right? And by the time the 5-year lease is over, 5-year car loan is over, because they're like 72 months and stuff now, right? Crazy long financing. It's just crazy for an asset that's depreciating, right? It's depreciating, and you have a 7-year loan? Oh my God. And every minute, like literally in 2 years, you've lost 40% of the car's value. And you're paying long term? Like, oh my God, it doesn't make sense. Why do people do it? But anyways, if you do it this way, you're like, okay, I understand I'm paying 2% a year for a depreciating asset, which is stupid. But I look at it like they're going to give you 40K for 2%. So therefore, boom, I can make 16% over here, okay, minus my 2% carrying charge. So I have a carry trade earning 14% a year. My car now makes me money. The thing is, it still loses money faster than it makes, because I'm not going to make 20% in 2 years. Actually, I did, didn't I? Well, whatever. Whatever. I got lucky this year because of the stock markets, right? But anyways, I hope you get the point. Like, everything you should do makes money. Okay? Everything you do should make money. You're forgetting the payment. No, but that's the 2%. Okay? Charlie, I guess if you need to watch these, you got to be here more often. There's 6,000 videos on YouTube alone. 6,000 videos on YouTube associated with my work. Oh, okay, yeah. Okay, Joseph, yes. I think I know what you're saying and going there, but it's a concept that I'm trying to get to. Okay? Right? Because you're paying down your 40,000, so there's amortization going on. Okay? So we can, like, so I'm not arguing with you, and I know you're right. Let's just say it that way. But what your payment is doing is amortizing the loan, and then at some point I can sell the asset. Obviously, I'm not going to get 40K for a 2-year-old BMW, but it's worth something. So I can sell it today for, I don't know, what, 28, 29? And get that money back and be done with it, right? So there's some give and take in it, but it's the message I'm trying to get across, what people might be doing with their money. Okay? Okay? Yeah, so, yeah, it's like... It's almost like it's a hedge, or like I described it there, it's a bit of a carry trade. But the thing is, here's, I guess, what I'm going to, because I want you guys to be businesses, right? And business owners, and I want you to be bosses and stuff. And I think of, like, truly, some people lease a car, spend, let's say, I don't know, $500 a month on a car, plus gas, plus brakes, plus tires, plus insurance. And what do? They drive to their bullshit job where they earn no money, because that's why they had to borrow the money in the first place. And it's a downward spiral, and this is why it's called the poverty trap, because your job sucks, but you have to have a job to pay your rent and feed your kids. You'd gladly go eat every other day if you could, but you have to take care of the kids, right? So now you got to have this job. So you got this stupid car for your stupid job, and it's just, right? It sucks. It literally sucks your net worth out. You could be a currency trader and just work at home and have none of those expenses. But the other thing that I'm trying to do is say, if you build up net worth, you can put your money to work. So let's say your car costs you $500 a month, like I was just saying, but for me, it costs me, let's say, $180 a month for the same car, because I'm using the money to make money. And as you said, well, you still have to amortize, but I see that as getting it back. So the biggest cost is depreciation, right? But at the end of the day, I own an asset, and I'm making income from the way I structured the deal. Where it's all about the structure, right? And meanwhile, I don't know, I'm using money to make the money and all that kind of stuff. So, it ends up being a $9,000 car for me and a $45,000 car for you. And, okay. So cool. Okay, cool. And of course, at the end of it, right, you still don't have any money. Or not you, but whatever, this example, right? The person still has no money, but I still own those assets in the stock market. After the car's been paid for, I've sold it or paid off the loan, amortized it to zero. Then what? I'm still in the stock market. It's still making me money. Okay? See, Alton, I don't do things like that. Okay? I don't do that. I do not do that. Okay? It's a guaranteed audit if you're going to do that. Gary says, you saw me in a BBC World News report last night? Cool, send me a link. Okay. Let's take a look at exotics. It's weird though, like she's stalking me like that, Gary. That's weird. All right, here we go through our targets. Look at that. Here's our trade plan from 3 weeks ago or something. Oh, really? Was it during the swing trading webinar? Mm-hmm. Have you guys seen the 40-year-old virgin? There's a funny scene where they're trying to teach him to be cool and how to talk to women. And then the black guy's wife comes in, and she's big and bossy or something. And he looks at her and says, yo, you better keep your hoe in check. And she's like, what did you call me? You better. Anyways, it's just funny. What did you call me? Oh, no, you didn't. Ronald says, I'm thinking borrowing money, invest, paying it back, and borrow. So I've been working deals since March and April to lock in money. So I've actually locked in money way back in March. We're going, I'm going to get the money now, I think, next week. I think Wednesday. Amazing, right? I started in April. Right? I started in April, and I'm just receiving the cash next week. That's more than 6 months, guys. But I'm locked in that price, the earlier price. So what people have done, or what institutions have done, is they realized the stock market was down, the bond market was down, borrowing was down, interest rates are at zero at that point. And the Fed was even thinking about going negative. So I go, boom. So it was before the Fed said never negative. So I'm like, this is great. Like literally free money, right? So I jump into the market and I start making phone calls. I'm like, give me cash. I want as much cash as I can get. And they're like, okay. And like no one else was asking for this. So I'm signing deals. And then people are realizing, dude, we just gave them free money. So what they've been doing, it's great. Like, of course, they would never admit to this. They're like, oh, it takes a while now. It's going to be a while before it closes, but everything's done, right? And so what they've been doing is front running everything. And I think what they've done is guaranteed me the money for free and then delayed the whole process, took all that money they were going to give me and jammed it into some sort of market, probably the bond market, but it would have been great if they stuffed it all in the stock market, doubled their money, and now at the end of the year, now they're all bitchy, like, we got to close fast. You got to come in. We got to get this transaction done by the end of the year. Like, what do you mean? Where have you been for the last 8 months, right? So anyways, so it's all going to happen, but I think everything's been front run. So this is what smart institutional money is doing. Locking in deal flow and then front running everything and then giving it the money back after they've paid for the free financing. Meanwhile, I'm going to get my free financing. Now, I might have missed my deal because it took 8 months, but that's that, right? So now, who was it? Ronald, right? I think Ronald's like, yeah, so I'm thinking of borrowing money. You're about 8 or 9 months late from the bottom. It doesn't mean you're too late, obviously, because I think interest rates are going to be where they are near zero, right? Near zero until 2024. But what's really happened? Okay, the 10-year T-note a year ago was 1.9%. Okay, 10-year T-note. 10-year T-note. Then in April, it was 0.45%. And that's where I'm like, dumbass of what? And I'm like, boom, I want that liquidity. Give it to me, baby. Right? I'm like, holy crap. The cheapest money in history. Cheapest money in history. Now I was thinking, probably not true. They probably had negative interest rates inadvertently 200 or 300 years ago. But anyways, cheapest money ever in my lifetime for sure. Right? Cheaper than my dad's, probably cheaper than my grandpa, like the cheapest money in generations, right? And so the Fed funds rate is still 0.25, right? 10-year T-note is 0.45. So now here we are in December. So I locked in here. So now it's December. Fed funds rate is still 0.25, right? 0.20 to 0.5, right? 0.25. But the 10-year T-note is 0.96. So interest rates have doubled now. So Ronald says, I'm thinking of borrowing money. It's not a bad idea, except you're going to pay twice as much as me. Now, it's still ridiculously cheap, but you see the percentage difference of knowing when to pull the trigger. Okay, this was the same day or same period where I told you guys you can't save your way into prosperity, right? You have to act. Do you guys remember the speech I said, sometimes you got to get out of the foxhole? It's dangerous. The shells landing all over. There's bullets whizzing over your head. And I'm the platoon leader saying, go, 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 get up! Come on, run! Get out of the foxhole! Run, run, run! Go! Fire your weapon! Go! Right? Because I said it's going to be dangerous, but you're going to get killed if you stay frozen in the foxhole where it's safe. Okay? So anyways, that's one way to have played it. Of course, I'm already in the stock market, so what am I going to do? Double my assets in the stock market? I'm already exposed to the beta, so doubling the beta is just, I don't know, you got to move your money around, right? So it's interesting, right? We're taking this sort of esoteric, maybe even existential look at the use of money. Okay? I don't know if you're a Bitcoin YouTube streamer covers these type of subjects, but if this is pretty good, would you take the opportunity to click the like button just to show me like this is interesting? Interesting. It's neat, right? Did you know interest rates doubled in the United States? Hey, Raymond, I'd like to follow up our conversation from a few months ago. I want to know what you've learned and if things are different, huh? So I want to know what you know now versus then. All right. So Charles says, when? Well, it's the yield in the 10-year T-note. Okay? Not Fed funds rate. That money's not yours. Are you a bank borrowing money from another bank to cover your Fed funds reserve requirements? No. So 10-year T-note yield. Hang on. Let's see if we can get a chart. So I made a big mistake. If I would, could you? All right. How do I day range? 52-week range. I want. All right. So you can see, like I just said, over the course of 52 weeks, interest rates were as high as almost 2%. And look at that. This went as low as 0.38. Look at the spread. I locked in at 0.45. Okay. So, okay, and now we're here. I want this better. There we go. Year to date. No, let's do 6 months. All right. So interest rates hit a low. Oh, even over, look at that. 6 months ago, the low was 0.55. Well, I bought lower than that. So we have to go further out. Year to date, obviously. Okay. 0.45. Where is it? It says 0.38. I don't see it. Yes, see it? Where is it? It's weird, so it's not reporting it right. But anyways, let's say since here, this is only 0.5%, and now we're near 1%. So we went from 0.5% to 1%. I don't know why this ain't working, but you can see the 52-week range, and then you look here, and it was way up here, almost 2%. So they're calculating it oddly. But anyways, okay, you see that? So if we went from 0.5% to 1%, then from trough to peak, interest rates have doubled. If I run too far to get home, yeah. All right, so peso. Yeah, I need some. We need a correction. Yeah, you guys want to look at Bitcoin? Sure, I see it all as a distraction. I was pretty blunt yesterday. To care about it now is so ridiculously late that it's just dumb to me. So let's change this fib settings. No. And I want to add the 300. If I run too far to get home, yeah. If I run. All right, and then let's add 400. 400%. Add 5. We'll call this one 500%. You guys prefer I use fib numbers? Right? 233, 366. What's the next one? Right? 599. So if you want to do that instead of what I just did, what do you think? I think that's on a lot of IQ tests too, isn't it? Right? Like, how did I just come up with 599? Figure it out. It's very typical on a IQ test. Okay, or buy the dip. Yeah, yeah. So that's more interesting. Like, what are you going to do next? Okay. Okay. You're going to have to make decisions for that. I'm not going to coach you on this. Because people are much too willing to do dumb things. And then they'll blame me for it. Okay? So, wow, look at that. It hit the pivot points and stopped. What do you think about pivot points now? Look at the front run. Yeah, on the last day of the month, you could have bought it right in the sweet spot. Ridiculous. Okay. And what do you remember one of the reasons why this rallied a month ago? Acceptance from PayPal. So you should just be like farting around down in here somewhere and you're done. Okay. So again, the macroeconomic fundamentals of Bitcoin, I'm not really sure of it. Okay. But they're important, as you can see. Now, of course, you understand that they're just standard deviation tools based on market forces. So these numbers make sense. Like, this mathematically makes sense. Okay? It just mathematically makes sense. Okay? If you were a buyer at this range based on what happened in the previous period, then this is the best you could ever hope for, unless you're just totally not looking. Okay. Oh, the report was October 21st? October 21st, that is my date of birth. I got to the party and I did the Smurf. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. Yeah, right in there, huh? Yeah. So one of these things, remember, not a price. Remember all this? Not price-based exit. Remember all of that? Time-based exit. And then we know this particular week in the month is the time, the target time. And now you look at that and say, well, this is the week I figured Bitcoin would peak. Okay. Now, going beyond that, I don't know how much institutional investors are actually trading this and such. Okay. I don't know the institutional players. I know some institutions are in it and all that kind of stuff. So I'm just admitting I don't know. But like I wonder, when people come home for the holidays and they're not working and they have to hang out with their wife and children or their spouse and children, and they're bored out of their mind and they're sick of listening to Christmas music, right? Or Hanukkah music or Kwanzaa music, then what they're going to do is pick up their phone and start trading Bitcoin. So I don't know in this case if it's mostly amateur retail that they come in and there's a spike in volatility. But what I expect in Forex, and especially the stock market, those vols are going to drop precipitously. I think we're going to have half the volume today than normal. Okay. Yeah, well, look, what does fear of missing out mean? Fear of missing out. What does it mean? Means you have no idea what the hell you're doing. You missed out because you have no idea what you're doing. I don't have any FOMO. Why would I have FOMO? Right? I analyzed it and I passed on it. So I'm not exposed to it, so like who cares? But if there's okay. Joseph says 17% pullback. I'd rather have a 21.4. Okay. I think I want a t-shirt that just says no FOMO. I think that should be the license plate to my yellow Lamborghini. What do you think? I want the old, like, Murcielago, the old one. The scissor doors. License plate. No FOMO. The Ferrari is oh faux show. Isn't that funny? Oh, I got to do it. No FOMO is the Lambo, and oh faux show. 1, 2, 3, 4, 5, 6, 7, and it'll work. Yeah, there's the Ferrari. Here's the Ferrari. Here's the Lambo. There you go. Wouldn't that be great? Oh, for show. No FOMO and oh for show. Dude, I'm over 14, so I don't have an IG name. I know that's a cheap shot. I don't do Instagram. If I run, let's do pivots. Okay. What has the message been the last week in yen pairs? Yeah, I'm kidding. I don't have one though. But yeah. Right. I don't have TikTok. I looked at it and it seemed like mostly 17-year-old girls dancing in the mirror, or 17-year-old boys doing jokes and pranks and silly skits. But that doesn't fit my personality. So after using TikTok for one day, I locked my daughter in the room and cut Wi-Fi, took her phone away, turned the power off. There's no lights. There's nothing. Like, no way. Does someone have the link to the FX Bootcamp videos for Jack? I guess I'll have to do it. It's hard to type though. YouTube.com/FX Bootcamp. Number 1. If I run too far to get home, yeah.
To the downside, the 21 is below the 55. Technically speaking, the market is down. Fantastic. So what do we do with this information? Well, ideally now, what I try to do is line up price action.
It's about 2 hours worth of training videos for free.
So the market's down, so I'm looking for reasons to short. Well, how do I determine that? Well, how about things like, how about a 5-8 cross to the downside? Remember, price in the moment. All right, so how about in here? Almost got a 21.55 cross to the upside.
Nice. Absolutely. What do you want to do intraday? So let's, anyways, let's finish this. Okay. CAD coming down hard over long periods of time. Okay. I got out below somewhere here. So remember, I got out of this 2 weeks ago. And then there's Kiwi. I got out of this, 2 days ago. Unfortunately, it was down here. I can't do anything about that. Euro. This is a high flyer. Okay. Coming down. Okay. I'm out of euro yen. So let's change the templates now. Let's do position trading bullish bias. Okay. Euro yen, you're supposed to be out. You see this? Profit target conservative. Very, very obvious. Bullish profit target aggressive. You're right between the goalposts. Oh, but I needed 12 more pips. All right, whatever. Okay. So we can do that like, let's look at this one again. Change the template. Position trading bullish bias. Okay. Not hit the target yet. Okay. We take a look at CAD. Let's change the template. Position trading bullish bias. Not quite. Do we do pound? Let's do pound. Okay. Do you like these plans, by the way? Look at this. Plan A, plan B. Oh. With the Stokes kicker. Look at that. Kidding me. I gave that to you. Looks like on a Monday as well. Oh, look at the 382. Oh my God, you're killing me. Anyways, I was going to change the template, but forget it. I'm not going to do it. And then this training, if you remember, had to do with the breakout at the apex. You guys remember that? Okay. But remember, the message isn't the breakout because you don't know which way. It's where you're supposed to be doing your job. Trading in the middle is not ideal because you have a 50-50 chance of winning or losing. I don't like those odds. Okay? If there's 6 chambers, I don't want 3 bullets. Okay? So that was that message. And then it broke out. And the next thing is, you know how to trade a breakout, trade the role reversal. Stupid easy, right? So like the message is, you simply buy where you're supposed to buy, stay out of the middle, let it break, and when it does break, get this. Because I think I told you, if I remember this correctly, right? Oh, I wanted this to be blue. This was also likely to happen. I think I had drawn it this way too, didn't I? One or the other. So if you were a bear, let's just pick another color here. If you were a bear, you would either sell here or sell there. And if you're a bull, you'd either buy here or buy here. How many people can confirm that? Is that right, Libor? Yep. Oh, you want to do Ripple. I have commodities, I think. XRP. All right. Well, did you buy it at 50 cents? Or whatever this is? No? Then you missed it. And now what? You maybe have something like that going into the end of the year? That's funny, Highlander. Was it actually last Wednesday? It could be 6 months ago, right? I can't remember these things. So, right? That just gets you right up top of the range, top of the morning to you. Board, come on, board. Terrible though, huh? Does Wayne answer any YouTube questions? I think it's the whole point, my friend. Please explain the language you speak. English. But I'm working on my American. Pound Aussie. Okay, let's take a look at this. Pound Aussie. Okay, let's look at it first. Aussie is moderate. Pound was strong but has lost some. So does that look good to you right now? So let's do it this way. So Aussie is this, and pound is like this. So what do you expect to see over the short run? This is to Mario. Mario, what direction would you expect that to go? Broad, why don't you visit fxbootcamp.com, take all the training courses, join the live group, and also come to these free webinars every single day. Okay? We got you. If that's what you want, we can hit you hard. Okay? We can hit you hard. If that's what you want, you can get that big time. fxbootcamp.com. Okay, so that looks like a mediocre trade right off the bat. But you say up. Well, up would be better if this was more like this. Okay. All right, fine. So we have a mediocre but relatively strong pound and a neutral Aussie dollar. So I can't imagine it being great. But let's take a look. I don't even have it on a chart because it doesn't make sense. I'm harsh though, right? Because that is a relative strength play. But let's go anyways. Pound, Noki, pound Aussie. Oh, okay. Wow. Okay. Here's where let's do this. So we know, based on technical analysis, this is the price where bulls buy. This is the price where bears sell. So who's going to win? I have no idea. I have no idea. I don't know anything about Brexit. Okay. That's an event-driven strategy. I trade macroeconomics and fundamentals. So betting on Brexit and the reaction to Brexit, to me, is too much of a gamble. I trade economics, right? So there's just too much easier money going on than that, right? So anyways, those are the two prices. This is where bulls buy. Let me mark them. Come on. There we go. Okay, bulls buy here. Bears sell here. Bears. Okay. So like, I'm not sure what you would want to do here. Now you can see there's more of a downtrend. So if I was setting up December now, because what's happened already is irrelevant, I think what I would be doing here is I would probably do this. But it's really hard because now it's sort of 50-50. See, right? Like bears can sell here. You can see there's a little bit more bearishness. And we'll call this a breakout, pullback, roll reversal, and that we will probably do this in February. That's what it tells me. You see what I mean? That's what it tells me. It's not my opinion. I don't have an opinion on this. I don't even trade this. But you're asking me to read the sheet music and sing the melody. Like, I'm not Beethoven. I'm just reading the notes. So, if you were a bullish counter trend trader betting on pound for whatever reason, you had one shot and now you're done. Why would you buy it now? Well, if you were a bull, you would have to buy it in this area. It's ridiculously obvious. Okay? There was plan A there was no plan B, by the way, for the month of December. So plan A for the month of January is right in here. But we have a week and a half for that to happen. So is that going to happen today? Well, that's not what the technicals are telling me. I wouldn't buy it now, but we know the price, but we don't know the time. You see? Now, if you're not betting on a pound, then you're going to trade with Aussie. Now, why would I want Aussie? Well, for example, I told you at least 3 months ago to watch the change in export data reported by Australia. How many people remember that? I said two things. Pay very, very, very close attention to the RBA's report on exports and also the recovery in export data and import data from China. The third part of that had to be back in September, I think it was. It wasn't RBA, but it was RBNZ, the Deputy Minister of Finance for New Zealand, accidentally blurted out at a press conference that things weren't as bad as they thought they would be because of COVID. Boom! 3 reasons to be long Aussie dollar. Shall that continue? Watch the RBA export data. Watch the PBOC import data. By the way, probably tomorrow you'll get that information. Okay? And not going negative, which means bottom. But I've educated all of you on all of that. Thank you, Miguel. So if that's your play, look, this is all you have for December and January. Like, it's so right there, dude. Like, look, it's on the chart. No opinion. If you're a bear in December or January, these are your prices. But I know that's not what's going into the question. Okay? I know this is sort of higher level than the question. But if you can't answer this, then you will never understand what's going on in the lower level. You'll be like the dog chasing its tail. And by the way, the view never changes and it always stinks. Okay? So if you're able to answer that, so let's go back to the person that asked. What about Georgia Senate election? Okay. Anyways, I can't scroll back for some reason. Oh, because I'm still drawing. All right, whatever. Okay? So you need to know technical analysis. And it's amazing how almost everybody that I've ever mentored one-on-one will say, well, Wayne, I'm really good at technical analysis, but it's the fundamentals where I'm having problems. And then we start looking at their trading and their technicals are mediocre at best. Right? So I can't work on The fundamentals are fundamentals. They rarely change. Okay? Okay? I guess I'll do this. Okay? So if my general plan is this, on a 4-hour, let's engage this to the south side on a smaller time frame. You ready? I am now going to do, like, let's say, day trading bearish bias. Now I got to zip in. Check it out, yo. Look at this. Sell, sell, and then sometime tomorrow, or I guess next week, sell it at that price. You might have already had it. And this is the problem where most people don't understand. They're still trading today, but today's already dead. Okay. Steve Simpson's being blocked because I think he's calling me an idiot. All right, you might not agree with me, but I don't think I'm an idiot. So, where a lot of people fall short is they show up, let's say, like, here in New York, and they want to know what to do. They show up here in New York, or actually down here, and they want to know what to do. The answer is, well, what is it that you wanted to do yesterday? So already you should understand this is Monday's trade. Is that what you want to do? See? When you were here, you should be thinking here. Now, do you know if this is going to happen? No. No, of course not. But if you sold here and your stop's here, you're totally fine. And you wake up in the morning and you're down here and you make money. So now what are you going to do? You're going to set your trade. And you'll wake up. Well, you'll watch the market open on Sunday, and you might already be in it. Because today's game, if you will, is not just having it fall. Okay, that's what you expected yesterday when we were here. So therefore, you set up your trade plan here. You might have even pulled the trigger here. By the way, beautiful Asia fade, straight out of the day trading course. So what's this? We call this a Friday front run. So you might have already shorted, and you're done Monday. You're done Monday. You might actually be done all of next week. Okay. Now, it could still do stuff like this by the time you get short, but your stop's right in the right. The spot is all the stops are all predefined, by the way. If you sell, it goes above resistance. Done. If you're a buyer, you buy it, drop your stop below support. Done. It's all predefined. It's not complicated. You just have to do it. And most people do the right thing at the wrong time or the wrong thing at the wrong time. But very rarely people do anything at the right time. Okay? So right now, think of it this way. You don't believe in pivot points. Okay, great. But you do believe in price action. Great. So you traded, right, the breakout, pullback, and you're short at 1.778, right? No, I'm not. Why not? Because you're still trying to figure out what to do today. It was over yesterday. This was planned out, right? Brah, I will only do a live stream next week unless you subscribe. You must subscribe first, and if you do, I will do webinars next week for everybody. But it's going to come down to you. Have you subscribed and have you clicked the like button today? So let's plan next week. We know Monday, but what about the whole rest of the week? Swing trading bearish bias. Okay, check this out. This is also the sell zone for next week. And right now, you may have already shorted this. So I said you might be done. Now, you might lose, of course, and it does this, and you get knocked out for a small loss. Get over it. Cry me a river. Cry me a river. Oh, oh. You don't have to say anything. I already know. I heard it from them. Okay? But if you get this right, of course, what's the target? The conservative target here is 1.7486, which we also know to be true as support. So that was what I'd expect. Now, if you sold up here, you'd want to try to break that. So it depends on your belief of the trend. So the next, right, the next line in the sand. Oh, that's the aggressive one. All right, so that is the aggressive one. That's the best you can hope for. So you're going to sell it at 70, almost 78, targeting 75. So next week, between today and next week, you probably make 300 pips. So are you willing to risk 33 or 55? Are you willing to risk 55 pips for this? That gets you about here. It's not great. You willing to risk 100? 3-to-1 ratio, even if your stop is here. And the cool thing is, probably by tomorrow, aka Monday, you jam your stop at break even with 75 pips profit already. Yeah, Eddie, there was something went wrong yesterday. I apologize. So I'll have to come up with some way to make it up to you guys. But it's not your fault, it's mine. Okay. So these are the decisions you now have to make. Are you comfortable with a 100, 300 OCO?
As we overcome the pandemic, won't we have a better chance of making lighter, more sustainable packaging when we work together? At SABIC, we believe the chemistry...
Bloomberg Educated Investor is brought to you by DBFX from Deutsche Bank.
Trading currencies, like many investments, can be risky business. The 24-hour-a-day market is highly speculative and extremely volatile, so you'll need to have a trading plan in place before you begin.
There's no 4 o'clock close. I need to realize that price action will continue on beyond in a 24-hour fashion, so let me understand and learn the tools that are there, like orders.
When you put in an order, the way that you manage your risk is by using stop losses and limit orders. You put in a stop order that says if things go bad, if your analysis was wrong,
Sevenfold
you start to lose money.
tie, by the way.
At a certain point, when that stop loss order is triggered, you're taken out of the market before things get worse.
Then there are limit orders that protect you when you're making money on the trade. They are also called take-profit orders.
A lot of times what people will do is that they'll see their position move in their favor and then they'll let it completely reverse against them.
McDonald protects his trades using both tools, and when one is triggered, it cancels the other. It's called an OCO order.
When I place an order, I actually place 2 different orders, a stop loss to protect me from the downside and a limit order to where my profit target is.
Another phrase in the language of FX is being stopped out.
Let's say you want to go long, you're buying, the market turns sour on you, you're losing money. You have a stop loss order in place to protect your downside. When that stop loss is hit, you're stopped out.
With a proper risk plan in place, you have a better chance of surviving losing trades and profiting when you make winning ones. Thanks for watching Bloomberg, The Educated Investor. I'm Carol Biaggi.
So that we did that over 2 years, multiple interviews, but I was the only one in both years. And I think it was because one year right before the interview, she apologized. I go into the studio or whatever, and so the setup is all there. She's like, "I'm so sorry, we're running behind, probably close to a half an hour. Do you mind waiting while we do this other stuff?" I'm like, "Oh, Carol, yeah, no problem." And then so she comes out about 25 minutes later, and I got my laptop open and I'm trading, and she's like, "What are you doing?" I'm like, "I'm trading." She's like, "Right now?" I'm like, "Yeah." "Can I see?" "I don't know." So anyway, so yeah, so she's there, the camera crew's there, the sound guy's there, the lighting guy's there. They're all leaning over. I'm like, "Look, this is how you do it." And they're like, "It's so hard. We can't see." And I'm like, "Well, you got that giant monitor up there, right? Let's hook it up to the monitor." So all of a sudden I'm teaching them how to trade and stuff, and boom, they invited me back for the second year. It was pretty funny. All right. So like I'm saying, today you have already traded what you want for next week. This is where I'm trying to get you. If you're always stuck in the moment, you'll never get out. You are such a fool to trade like you do. Oh. You got to, how does it go? You got to stand up straight. You got to carry your own weight. Your profits are going nowhere, baby. You got stuck in the moment and you can't get out of it. Yeah, you're stuck today. And today was done yesterday by professionals. Today, people are taking profit and setting up tomorrow next week. I really want you to make that a key thing that you must grasp for 2021. Today is dead. Today is about profit taking. Tomorrow is about profit taking tomorrow because of the trades we made today. Right? And that means you got to do the work. You have to have the planning. You have the conviction. You got to be wearing the big girl panties. You have to make all the decisions and be the boss all the time. Right? Yes, scalping 10 pips at a time on a YouTube channel is great for the kids. But you need to run a small business and create value to a customer base that relies on you to do the analysis, to do the critical thinking, and to make decisions and then execute plans. That's where your value proposition is. Yeah, Marina's 15 years old. I was 32. 32. So what do you think? How many people are going to make a big change in 2021 or continue the journey they're well on? Like, how many people are going to make next year a breakthrough banner year, the one that you'll always remember as being positive and a change of everything? Anybody? Yeah, remember we're going to meet up in Basra, have a big party. Party like it's 1999 BC. Can't wait to do that one. That's going to be great. Right? We'll all be good Samaritans that day. If not Sumar, then maybe St. Lucia. Yeah. Very cool. Right on. Well, I did create the annual membership for my group. I can't do it for the live trading group, or what I call the professional track. I can't do that. That's a whole different thing, all different programming, all different everything. But for those that are in my group that meets Thursdays, I did create an annual membership. I just haven't told anybody. I haven't emailed anybody. But it's ready for testing. So if you want to save a little money, but more importantly, make a commitment for all of 2021 to make sure you can't back out, wimp out, or screw up, I made that for you. So right now, to get access to that, you need to have already taken the training courses. So maybe you did that earlier in the year. Maybe you did it last year, but you want to re-up and join the swing trading group, then I've made that available to you. So email me, wayne@fxbootcamp.com. Yes, I saw that, Kishore. Thank you. Yeah, so I'll get back to you today, okay? No, I did not know that, Sanan. Yeah. Yeah, I think I made it $897 instead of $1,200. That's pretty good, right? Right, that's pretty good, right? Think so. Not quite 382, but close. You seem like a nice number. Yeah, very nice. Very nice. So email me if you want to commit to being on my team next year, because here's the other flip side of it. Then that means I have to commit for another year. Right? Your acceptance is my promise, so that forces me to stay focused and stay sharp. Yeah. Cool. Well, again, email me, wayne@fxbootcamp.com if that's you. If you want to commit for a solid year, then I'm committing for a solid year. So, peace on earth. May the pips be with you. May your profits be above average. Thank you, Traders Way, for being good people and offering a good service. Remember, these videos do not cost you money, but they do they come with an obligation. At least fill out the demo, right? At least download a demo, fill out the demo form at tradersway.com. It's not a complicated offer or a big ask. Okay? Yeah. All right. Peace on earth. May the pips be with you. May your profits be above average. Cheers.